So welcome to GCA Studios, sponsored by Game Change Agency. My name is Jay Taylor, and I'll be your host. My guest today is Norman Marks, who's an award-winning author, prolific blogger, lecturer, advisor, and self-described evangelist for better-run businesses. He served as chief audit executive for 20 years in global companies and in various other roles, including a chief risk officer, compliance officer, ethics officer, and also worked in the area of IT governance. His current focus is on improving corporate governance, risk management, internal audit, enterprise performance, and in the value of information itself. So Norman, welcome to GCA Studios. Let's start by having you tell us a little bit about yourself and then how you became involved in being really a thought leader around risk management.
Thank you, Jay, and a pleasure to join you for this important topic and a discussion about it. So I guess I've been involved in risk just like everybody else. We've been managing risk our entire lives. My background is initially in the United Kingdom, which you may be able to gather from my accent. I spent 10 years in public accounting. About half of that, I'm a chartered accountant and a CPA, but about half of that was focused on the IT world. And at that time, it was very much process and controls and risk focused practice. So that was really good. And then I came to the States and eventually moved into internal audit, IT, as you said, and then running internal audit. And when I started running the internal audit function, I started thinking that I didn't want to just look at individual processes or business locations. I wanted to look at the issues and therefore the risks that mattered to running the company and being successful. So I basically took what I now call an enterprise risk-based approach and worked with the executives and board members to understand which were the most significant risks to the success of the organization, the value that they were trying to deliver. And that eventually got me the pleasure and the privilege of running risk management as well. They said, Norman, you're doing this, why don't you expand it a little bit and start up an enterprise risk management function for us? So I started doing that, and all of this time I had been, as you said, writing and blogging and doing some presentations. And then out of the blue, the Institute of Risk Management decided to give me the wonderful honor as an honorary fellow of the Institute of Risk Management. And that was, I was also honored by the Open Compliance and Ethics Group for my work on GRC, thought leadership. So I've been focused on this for quite a long time. And I retired about 5 years ago, but I'm still busy, as you said. I'm writing some books and trying to help people bridge what I see as a big gap. And that's between what people like you and I see as the value of risk management and the perception of it by executives and board members, that they don't see it actually contributing to how they set strategy and then how they execute on strategy, how they run the business day to day. They see it as a compliance exercise most of the time and not really contributing to what we'd like to think is increasing the likelihood and extent of achieving objectives. So I'm trying to work that issue and make people think about what is holding this back and what are the kind of things that we can do, whether it's from a board point of view, a chief executive point of view, or a practitioner point of view, to make risk management real, make it something more than a periodic review of a list of risks and something that is actually helping people make better decisions.
Okay. So the Institute of Risk Management was a big part of getting started in this area, it sounds like. And you mentioned these opinions of senior leaders and board members. I've seen those surveys where they feel that risk management is basically a compliance function. Why do they feel that way? What are chief risk officers doing wrong in their opinion?
Well, one of the things is they keep talking about risk.
Mhm.
They keep talking about risk. I mean, just this week, I was talking to a group in Tallahassee, and I share the same metaphor. We are all in the business of taking risk.
Mhm.
We have to take risk to survive. And for example, every time you leave your home, you are taking a risk. You're taking actually multiple risks, especially if you're going to drive. You might be in an accident. You might have some lethal consequences to that. You might be delayed. There are all kinds of things that could happen. And the thing is that if at every time you leave your home, somebody pops out and says, hi, I'm your chief risk officer. Here's a list of all the things that might go wrong. Eventually, you're going to start discarding that person and think they're irrelevant because I've got to go to work. I need to go to work to earn a living. I need to leave to go pick up my children, to meet my wife, to attend this board meeting. I've got to do this. Stop telling me all the things that might go wrong because I need to do this. And to me, they're not, risk practitioners are only focused on the downside. They're not thinking about why people need to take these risks. They're not helping people make these, what I call informed and intelligent decisions that weigh all the potential consequences of their actions so that they can now make that appropriate decision and take the right risk. And that's really what it is, because we exist, and especially as board members, it's all about taking risks, but it's about taking the right risks and knowing when it's the right time to take this risk or that risk, because you need to do that in order to achieve your objective, to have a project that is completed on time, to achieve your earnings targets, to deliver the value of the organization to the shareholders. You need to take risk. And the fact that we keep talking about risk instead of achieving objectives is the problem. We are focused, too many risk practitioners are focused on, like I said, a list of what could go wrong, instead of understanding all the potential things that might happen. So if I started writing and talking about, let's talk about plain English. Let's use plain English terms to talk about what this is. It's about understanding what might happen, anticipating what might happen. If you do nothing, and if you take this option or that option. Now, is that okay? If this actually happened, is that okay? Is that acceptable? If not, what are we going to do about it? Now, let's do some things and take the right risks, if you like, to achieve our objectives. But it's about moving forward, not being so afraid of stepping out there, because that's all the risk practitioner is talking about, is a list of the things that could go wrong. So, for example, if a CFO presents to the board meeting, to the board, here is my projection for the rest of the year.
Mm-hmm.
Somebody should be saying, well, what's your confidence level in achieving that? What has to happen if you are to achieve that number? What happens if you don't achieve that number? What's the likelihood of going below that? And why is that? What can we do about that? What's the potential for going over it? What can we do about that? These are the sort of things that business people and board members do all the time. We just don't think about it as risk management, but it is risk management. It's doing it in that more disciplined and structured fashion so that you can make the right decision, anticipating what might happen and doing the best you can to provide some clarity about what might happen and then take the appropriate action. And if the risk officer's focus is more on helping people succeed rather than helping them avoid failure, they're going to be accepted. Deloitte did this study, and only 13% of executives think that risk management is actually helping them set and then execute on strategies. 13%. That's pretty awful. If you ask risk officers, what's holding you up? Why can't you get your risk management program mature? They keep coming back to lack of commitment, lack of support, and lack of resources. Well, why aren't they getting support, commitment, and resources, because people don't believe that they're adding value. Because all they're doing is telling you about all the things that might go wrong. And yes, we understand that. We're going to put that in the filing with the SEC. We're going to tell the board we're addressing it, but it's like a separate discussion. Very few organizations, I've only run into one, which was the Hunton Bay Company up in Canada, that when the board talks about strategy, when the board talks about performance, we also integrate risk fully into that discussion. They don't have a separate meeting about risk. The idea you have a risk committee separate from strategy and long-term planning, to me, doesn't make any sense. It all should be one and the same, talking about what might happen, and let's make sure we have the right discipline and process to understand and react to what might happen. And I think that we're starting to see some progress, recognizing that so much more is about decision-making and improving it, linking in strategy and performance. It started, for example, with Kaplan and the balanced scorecard, and Professor Kaplan said the risk factors and the risk indicators should be in there as well as your performance indicators and status. COSO is starting to talk about improving decision-making, but it doesn't, I don't think it goes far enough in the 2017. The ISO community,
we'll get into that.
But it's still a gap. And I think I might have told you, Jay, that like I said, I've been talking about this for some time, and one organization changed the name of their function from risk management and to eliminate the use of the word risk and just talk about helping people succeed. And all of a sudden, management wanted to listen to them. Management wanted to work with them and to adopt some of these, because they could see that it's all about increasing the likelihood of success, not about addressing the things that could go wrong. Certainly, you need to understand what could go wrong in order to increase the likelihood of success. But when the CFO comes to you and says, well, I've got a 75% likelihood we'll hit that earnings target, there's also a likelihood, 75% perhaps, of getting different customers to agree to revenue. So I think we should be looking at the likelihood of the reward side as well as the likelihood of the harm side. And again, too many risk practitioners, the chief risk officer says, my job is only to look at the downside. Somebody else, like the strategy officer, looks at the upside. Well, is the same discipline and method used for both? And how does a board member weigh the harms and the good when there's different methodologies used to assess each one of them? So I think that there's a big gap, and a board can really start insisting on, have you really thought this through? Have you really thought this through? And
you mentioned COSO. So for those that aren't really familiar with it, I want to ask some questions specifically about this guidance that came out in June. So it's the Committee of Sponsoring Organizations of the Treadway Commission, known as COSO, and they issued this supplemental guidance in June on enterprise risk management, specifically to address the importance of considering risk in strategy setting processes, as well as driving performance in organizations. In your experience, Norman, is it important for companies to integrate the consideration of risk in their decision and strategy? Why is it important?
Absolutely, it is. Look, if you set off in the wrong direction, you're probably not going to get where you want to go. If you set off in a direction that is unlikely to get you where you want to go, you probably won't arrive there safely and on time. So setting the right strategy is absolutely fundamental. Now, COSO has done a good job in emphasizing that part of looking at different strategies is, shall we say, scenario modeling or scenario considerations, actually thinking about, well, if we take this, what will happen? what's the likelihood and extent of achieving the rewards that this seems to offer, and also what are the likelihood and extent of the things that might go wrong. Recognizing that there's both positive and negative effects and consequences of each decision. So again, this is nothing new. There's not a board member out there that doesn't do this already, but it's providing some discipline and structure to it, which is necessary. So COSO has done a good job of saying, when you're deciding which strategy and objective to adopt as an organization, consider all the things that might happen. Where it fails, to me, is it doesn't talk about the things that are necessary in order to reach that decision. It says, take each option and consider what might happen. But what if you don't have good information in order to even identify the potential strategies? What if you are not involving all the people involved? So for example, a lot of organizations don't bring the compliance company or the compliance department into the planning process. So they decide what they're going to do. And then they bring compliance in afterwards, who then have to, if you like, chase the bus and tell them all the problems that they might have from a compliance point of view. So I see that there's, if you like, there's risk to the strategy setting process, which COSO has not properly included. Another thing, for example, from a board point of view, if I was on a board and the CEO came to me and said, here's our suggestion. This is the option that we have selected as a strategy to achieve 2017-2018 objectives. I would want to know, what are the options? Not only the ones that you like, but what do the CEO, CFO, and COO recommend that you decided were not okay? What are the other options? And a lot of CEOs won't share that with the board because they only want the board to see the ones which were their top 2 or 3 and perhaps try and bias them to and lead them to endorsing the CEO's recommendation. So I think that there's things that are necessary in order to identify even the strategic options. But I think all of this is really critical because it does start with knowing where you want to go and identifying the different ways to get there, and then deciding on balance which are the pros and cons. For example, if I want to come visit you and I'm going to fly into Detroit, I've got different ways of getting there. And some are going to cost more than others. Some are going to get me there earlier than others. For example, if I drove, and since I'm retired, maybe I would take the time to do that. I could see things on the way. Perhaps be less expensive, but I wouldn't be able to get to you as quickly. On the other hand, if I flew, it might cost more, but I'll be able to spend time with you faster. So there's pros and cons either way. And the discipline that needs to be there, I think, is important.
I see. You know, the COSO document talks about that it's essential to consider both the level of harm as well as upside opportunities if risk management is going to be effective. In other words, risk can be either harmful or it can be positive. And that seems to make sense, but I think from what I've read, you seem to disagree on that point. Why do you disagree?
So if I think about the decision to come visit you, making that decision does not just have harm and does not just have opportunity. It has both. There are multiple consequences. And not only that, but if I talk about the likelihood and magnitude, if you like, the size of the impact of something happen. So for example, if I'm going to come fly with you and I've got to change in Chicago from San Francisco to Detroit, I can't get there direct. I have to change in Chicago. Okay. There's a likelihood that I might have a delay. And if I have a delay, that could cause me to miss my connection. Now, the delay could be 5 minutes, or it could be 5 hours. So there's a range of consequences. Okay, each one of those has a potential, has a different likelihood, and perhaps also the range of consequences needs to be considered. It's not, see, COSO seems to treat each potential event or situation, although actually they only talk about events instead of events or situations, as if it's either good or bad. And what I'm saying, it's
one or the other.
It can be both. It can be good and bad. So for example, I flew back this week from Tallahassee in Florida after doing a presentation, and I got stuck for 3 hours in Atlanta. Okay.
Yeah.
Now that was frustrating, but it allowed me to go and have something to eat. So there was good and bad that came out of it. I was able to catch up on some writing that I was planning to do. So there's good and bad. And again, we need to be able to weigh all the potential consequences in order to make an intelligent and informed decision. So I think that it's the two things. It's, you've got multiple effects of a single event or situation, not just one. And there's a range of possibilities, not just a point. I mean, they talk about a heat map.
Not just a high, medium, or low impact, but
yeah, and in fact, you've actually got a range. So if my favorite example is, I live here in Northern California, and we have from time to time earthquakes. So I like to talk to people and say, what's the likelihood of having an earthquake here that will affect where I live in San Jose, California? What's the likelihood of an earthquake? And they may say, well, it's 5% and it's a 6.0, or 2%, 7.0. And I said, do you realize that there are earthquakes here? And if I look in this room, there are cracks in the ceiling to prove it. There are earthquakes every day. There are earthquakes every single day. The thing is that they don't necessarily have any impact at all. Or I might have a minor one. It might interrupt my internet connection for a little period of time as some kind of connection or wiring or cabling is affected. So the likelihood ranges from 100% of very small to hopefully less than 1% of very, very significant, like an 8.0. So it's a whole range of potential. And COSO doesn't understand that, or they don't talk about that at all. And this is very real for organizations who actually do business here in California. How do you figure out what to do about earthquakes? Do you only plan for the worst potential situation? Or do you take into account all the potential situations where you've got perhaps minor damage and minor disruption all the way up to more significant? So, like I said, I think COSO, if I look only at the spirit of COSO in the executive summary, it says a lot of good things. Okay, I don't think it uses language that is clear and meaningful to a board member. Okay, because again, it doesn't talk about achieving objectives. It doesn't talk about delivering success. It still talks about risk.
Okay. Let me get into that a little bit, because one of the things
about his own language, and if you look then at the body of the framework, it doesn't give you enough detail to actually execute what they say in the executive summary.
Okay. I know there are something like 5 components and 20 principles that are supposed to provide management and the board with this framework to better understand and be able to manage risk around strategy and objectives. But I get the sense from your reading that you don't think the framework is really complete. There might be some key things missing. And I think you just touched on some. Are there others that might be missing in the framework?
Well, the most important one is it talks about decision making, but there's 0 principles around decision making.
Okay.
Including, do you have reliable information to support your decisions? Are the right people involved? what about all the people that might be affected by your decision? Are they involved?
Mm-hmm.
So there are a lot of things that are missing from there, which are really critical to me in terms of understanding the management of risk. And again, to me, it's all about context. Okay, we are trying to achieve success. We are trying to achieve our objectives. We're trying to set the right strategies, execute on them to meet our earnings targets, remain in compliance, satisfy our community as well as our other stakeholders. But when it talks about prioritizing the things that might happen, which they call risks, it tries to put dollar values around them. It tries to put other things instead of how will this affect what I'm trying to do? And to me, it's all about the journey of where we are to where we need to go. And what's going to affect my success or failure of getting there, maybe even earlier than I wanted to, that I need to be there so I can do some other things. Maybe I have an opportunity to exceed my target. If there's an opportunity to exceed my target, why am I not considering that? Why am I not building up the capacity to do that? So I think there's a lot that's missing in terms of, like I said, if they just sat down instead of thinking about risk, and if they talked about success and performance and achieving objectives, I think you'd have got a different document. Now, you and I both know Doug Anderson at the IIA, and I don't know whether you saw his recent article that was published, and he talks about this much better. And my comment to him was, Doug, I wish you'd been the author instead of simply an advisor to COSO, because he's getting it right. He's talking about different situations. Am I going to enter into this contract, or am I going to expand? I'm going to build this new product, and what might happen? And it's a structured and thoughtful process of thinking about what might happen in the future, and then deciding whether that's okay or not. And what am I going to do about it if it's not? That is risk management for me.
One of the things I think you believe in is education for our board members and our senior leaders in our company. And you mentioned a minute ago this COSO executive summary. If you had a busy board member, busy top executive, and you wanted to educate them about enterprise risk management, would you personally give them that executive summary to help do that? If not, why?
No, I would not, because I don't think they're going to come away with the right understanding of what risk management is. Yes, it has some good words talking about things like culture, but risk culture is such a difficult concept to get your arms around that I don't think it really matters. I think a board member should be thinking about this, okay? If someone does something wrong, let's say your daughter does something wrong and comes to you and says, I'm sorry, Dad, I did something wrong. And you look at them and say, that was so stupid. What were you thinking? And the truth is they probably weren't thinking. And if, from my point of view, I would talk to a board member and say, it's all about making sure that management was thinking before they did anything. What were they thinking? Did they actually think through what they're trying to do? What might happen? Is that okay or not? And then how can we monitor, after we're taking some action, how can we monitor that it was still on path to do something? And if we just stop talking about risk management and enterprise risk management and start talking about how can we be more careful and considerate and thoughtful in our decision making, we'll get to where we need to go.
Okay. I know sometimes in your writing you can be considered as controversial.
Yes.
A year or so ago, you wrote a book on world-class risk management. And then you said in your blogging that, in your humble opinion, the guidance in your book is superior to that provided by COSO ERM and also ISO, the International Standards Organization. Why do you feel that way?
I was very lucky, Jay. I've been able to surround myself with thought leaders in the profession from all around the world, including the grandfather of ISO, Grant Purdy in Australia.
Australia, yes.
To people in Singapore who are thought leaders in financial risk management, and people in Canada. And they have basically helped me with my thinking, and they were kind enough to be a panel of reviewers of the book. So it was really an opportunity to take the work that had been done by ISO and COSO back in 2004, and the work that I've been doing, talking and listening especially to practitioners, board members, and executives around the world, and talk about what I think would work. Like I said, using plain English, focusing on achieving success, focusing on how you actually make decisions. That has taken us to this point. One of the things which I was hoping was that COSO would take this opportunity, and ISO the same thing, to be a true thought leadership paper, a true thought leadership document. Unfortunately, for whatever reason, I don't think they have tried to set out a framework and guidance that will lead people to the best-in-class risk management. They have moved the needle somewhat from their 2004 and upgraded it to include some other things, but they haven't taken it as far as leading risk management people are taking things today. So the best risk management professionals are using similar discipline to look at all the potential consequences, both good and bad. They recognize there's a range of possibilities, and they've been doing this for a long time. It's just not there, and perhaps part of this is reflective of the fact that risk management is not mature. COSO has, and others have worked with Professor Mark Beasley at the North Carolina State University's ERM initiative, and it's revealing to look at their results. In 2010, they did a study and they asked risk officers, risk practitioners, how mature their program was. 3.4% said it was mature, really good. 3.4. Move it forward 6 years to 2016. So it came out this year, and it's gone from 3.4 to 5%.
Wow. I didn't realize that.
So it's up 50%, but it's still only 5%. So this is part of the problem, because the people who are included in the 5% need to be writing the guidance. I'm not sure that's always the case. And it's not necessarily going to be easy to write guidance that is going to take people to what can be, if you like, world-class risk management. What I tried to do in my book was to talk about what would constitute world-class, but do it using a maturity model so that people could look at where they were and see whether that's where they're comfortable being. Because, there's a cost to moving up the maturity scale, and including all of the, using all of the tools and techniques and the resources. And if your risk is fairly, it's not very dynamic, it doesn't change very much, and you've got well-trained people, perhaps you don't need to invest a lot. On the other hand, if you have a very dynamic environment and things are changing constantly, your competitors are very active, then you probably need to spend a lot more time thinking about the quality of decision-making and whether it's going to enable your organization to be agile, because agility is a consequence of really thinking through what might happen and building the capacity to deal with it. So I think that I'm not sure I'd necessarily give, there are board members I would give the book to, because I'm told it's an easy read. And in fact, it's got some very nice reviews, and You mentioned I try to be controversial. One of the things that frustrates me is I write all of this provocative stuff and everybody agrees with me. And that seems to be the case with this book, is that people are picking it up, finding it, like I said, easy to read, and trying to adopt it and finding it works. And in that case, that's wonderful. But like I said, even though it's now a couple of years since I wrote that book,
Mm-hmm.
what I put in there is perhaps current best practice, maybe even leading best practice. It's difficult to get frameworks and standards to explain and describe as the best practice leading practice situation.
Mm-hmm.
And unfortunately, until you get there, you're going to have this gap where board members, chief executives, CFOs cannot see the value in
Yes.
risk management because they can't see how it's helping them be successful. It doesn't help them achieve what matters to them,
Mm-hmm.
right? Which is getting my number.
Yeah. Business success, growth,
Yeah,
opportunity.
yeah. When the CEO says, I've got a very important strategy meeting, I need you, CRO, to be there because you are business focused, you understand the business, you understand what we're trying to do, you understand the realities, and that sometimes we have to take risk in order to be successful. But it's about helping me, you help me make sure I've got the right information so I'm making the right decision in terms of what we're going to do going forward. Unfortunately, that's not the way many CROs are seen.
Mm-hmm. Hey, Norman, you mentioned a little while ago the idea of using scenario analysis in risk management, helping make better decisions, ultimately that's all about. Do you also see a role for other decision support techniques like game theory and wargaming used in risk management? Do you think that's something that can also enhance decision making?
Well, I think they're all in the same family, right? They're all ways of thinking through what might happen, how other people would respond, and therefore what is the best process and what's the best decision to make.
Mm-hmm.
So yeah, I think that all of these, in some environments, modeling is excellent, although you have to be careful with models.
Sure do.
Make sure that you apply some common sense and judgment to the results, recognize that people make mistakes in putting models together. But I think you should use all the techniques. I tell you, one of the things which we should not do is say, I know the answer because I've done this before.
Mm-hmm.
This is not the same world. And one of the problems with a lot of decision making by executives is they use their gut feeling instead of going through the appropriate analysis. They tend to rush to a decision instead of getting the right information, involving the right parties, and taking the necessary time to make the right decision. Now, obviously, sometimes you can't do that, in which case you need to recognize and build that environment that will support rapid decision making, right? So I think of traders in the derivatives market. They surround themselves with information so that it enables them to make fast, agile decisions. But I think that's part of the problem. Another problem is apparently 80% of executives don't even know what information is available to help them make a decision. So again, they come back to their gut feeling and their experience, which is not necessarily that the experience they had 3 years ago is not necessarily the world we live in today. As you know, for so many reasons, technology and society factors come into it. But I think it all comes down to what could help me make the right decision, and thinking about risk in the terms of, in plain English, thinking about, I like this word, anticipate. Can we anticipate what might happen? Is that okay? What am I options to address that. What will happen under each of these options using scenario analysis, game theory, all these different kind of things, bringing a whole bunch of people together to, if you like, war game it, think it through. I mean, just think about your favorite TV show and or movie, and the president is asking all of his generals and cabinet members about, okay, should we attack now? Okay, what could happen? We might have some innocent casualties. What's the likelihood? How many? That's risk management. They're really thinking through all the things that might happen. What's the likelihood we'll capture him alive, which is the end game, right? What's the likelihood
like
that
my CEO, Jay, I want to get into things like car sharing, ride sharing, autonomous driving. I want to turn around this particular area of the business. I want to do this. How can we do this with considering the options and making sure that we're making the right decisions? We're not just making them from the gut. We've got some very sensible plans that have been developed based upon things like scenario analysis and these different other types of decision tools. So that's innovative kind of CEO.
And what are our competitors doing? How fast do we have to move so that we're not too far behind the rest of the field? There's so many things to think about. And that's what it is. It's all about.
That's where game theory comes in, right? What are your competitors going to do? What about how the regulators react? What happens? Your labor unions, what do they think about it? What about your employee bases? On and on and on and on. So you're kind of playing that out and looking at the various alternatives. That's a very effective technique around decision making.
Yes.
Well, Norman, I've taken up a lot of your time today. I really appreciate it. But before we go, I just wondered, is there anything else maybe that I didn't touch on that you feel strongly about you'd like to mention before we wrap it up?
I think that one of the difficult things is the regulators are constantly pushing to have the chief risk officer and his team independent of management. And that can be dangerous for an organization's success because it puts the risk officer and the people that are trying to make sure that people are making the right decisions almost in competition and policing the people who are trying to run the business. The successful organization makes sure that everybody is on the same page and they're working together. Now, if somebody is taking some risk, not really thinking it through, then that needs to be escalated. But if the risk officer is seen to own all the negatives, all the potential harms, and we're free to go and take whatever risk we want, I think you're going in the wrong direction. So I think that we satisfy the regulators, we need to make sure that everybody is working together to help the organization succeed.
I see the same thing happening with chief compliance officers in organizations where the government wants to hold them personally liable or personally accountable for the behavior of the company, which is an impossibility, obviously.
Right.
So, again, thanks for all your time today. I really appreciate it. It's been a great discussion, and good luck to you in your endeavors. Thanks, Norman.
Thank you, Jay.